So let us start with AS7 now. Okay, audio, video, and screen, all the three are available. Okay, thank you very much. So let us now start with an important accounting standard, that is your AS7. Now this is your Group 2 accounting standard. It will be asked in your Group 2 exam, and it is applicable to all the three levels of your enterprises. So whether you are a level 1 enterprise or a level 2 enterprise or a level 3 enterprise, AS7 is applicable to everybody, right? Now, what is the name of the standard? So AS7, Accounting for Construction Contracts. So the name itself suggests you the objective. So what will be the objective? So here we are going to learn the accounting treatment with respect to construction contracts, right? That is the first important objective. So here we are going to learn in detail how to account these particular transactions or these construction contracts in the books of accounts. Now, point number one. Sir, when I talk about a contract, can I say there are two parties to a contract? Right? There are two parties to a contract, a contractor and a contractee. Sir, contractee is the person who gives the contract for construction of a particular asset to the contractor for an agreed price. So here, technically, the contractee is the person who is going to take the payment, and contractor is the person who is going to receive the payment in the form of a revenue, right? So technically, the revenue has to be recognized by the contractor and not by the contractor. So, sir, one of the biggest problems arising in such contracts is how to recognize the revenue from such contracts. Because, sir, when I speak about a construction contract, first thing that comes in your mind is, sir, these contracts run for a very long period of time. Means, say, for example, I'm constructing a building which is 12 floors. Now, can I say a 12-storied building or a 12-floor building will not get completed over a span of 2 or 3 or 4 months? So technically, it will take 2 or 3 or 4 years to complete that building. Yes or no? So technically, the biggest question arises for the contractor is how to recognize the revenue with respect to such contracts, because they are long term. They start in one financial year, they end in some other financial year. So technically, how much revenue has to be recognized is a big question mark. So some say, sir, record the revenue at the beginning of the contract. Some say record the revenue at the end of the contract when the contract is completed, because that could be the most correct thing. Because whatever is the profit or loss on contract, that can be calculated at the end of the contract on completion itself. So better you record the revenue and the total cost at the end only. Sir, but that is not a bit correct thing happening, because we have something called as batching concept. Right? Then somebody will say, sir, do one thing. If the contract is going to run for 4 years, you equally divide the contract value over the 4 years of period. So many permutation and combination arise. So to answer all these things, AS7 is made. So the second major objective of AS7 is it will show you how to recognize the revenue from the construction contracts in the books of the contractor. So technically, AS7 is applicable to only the contractors and not to the contractor, because it is the contractor who is going to earn revenue from the contract and not the contractee, right? So please understand, this AS is purely applicable to contractors. So in the books of contractors, how these contracts will be accounted and how the revenue will be recognized in the books of the contractor is what my objective is all about. Now let us try and understand what do you mean by a contract or a construction contract to be more correct. Sir, in layman's language, I'll say, in a layman's language, in a very normal language, I'll say, sir, construction contract is an agreement between two parties, that is the contractor and contractee, where an asset or group of assets will be constructed, where an asset or group of assets will be constructed for an agreed price. So basically, it is an agreement between two parties. One is a contractor who is going to perform the duty, who is going to construct a particular property or a particular asset, and it is the contractor who is going to give him the order. And definitely they are going to agree at a particular price. So at one particular price point, they are going to get into a contract and get the work done. This is a layman's language. But sir, what is the book definition? So as per AS7, there is a definition given. There is a definition given for construction contracts. So let's have a look. What exactly is the definition all about? Now, what it says, a construction contract is a contract specifically negotiated for the construction of an asset or a combination of assets that are closely interrelated or interdependent in terms of their design, technology, and function for their ultimate purpose or use. So basically, it can be one single asset or it can be combination of two, three, or four assets who are interrelated with each other, or technically they are one and the same, right? So here you enter into a contract for construction of such assets. Example, construction of building, dams, roadways, railways, sewage pipelines, etc. So when you enter into a contract for constructing such type of assets, which can be a single asset or a group of certain assets, or you call it as combination of certain assets, it can be called as a construction contract. But sir, construction contracts will also include architectural services. Means I would say those service contracts which are directly related, to your construction activity will also be treated as what? A construction contract. The best example is architectural services. So an architect is required when a building is constructed. An architect is required for construction of various assets. Say, for example, a metro railway station is to be designed. So definitely an architect will be required to design that metro rail station. So that architectural services are directly related to the construction of the asset. So those architectural services are also called as a construction contract. Then you can also I can also give you an example with respect to RCC consultants. Now, RCC consultants are the person who consult you on what type of cement should be used, what should be the strength of the material to be used. Because if you are building a dam, so for dam there is obviously some strength that is required to support that dam so that it can handle the pressure of water that is stored behind it. So you require RCC consultants. That service is also directly related to the construction of dam. That will be called as what? Construction contract. Apart from these service contracts, the contracts for destruction or demolition of old structures. Now, sir, I don't know whether in Bangalore or Chennai these things happens or not, but sir, it happens in Mumbai a lot, where the old constructions are demolished and a new building is constructed on it. Because in Mumbai there is a scarcity of land, so we don't have the horizontal expansion, we have the vertical expansion. Means a 5-story building was there, now they demolish it and construct a 15-story building on it. Because vertically you can expand, and Mumbai is very famous for vertical expansion because we have scarcity of land. But when you take in southern cities, if you take Chennai, you take Bangalore, you take Hyderabad, sir, we have technically individual houses. We have lots of individual independent houses in these cities, right? Because there is no scarcity of land and land is cheaper. Here we don't find skyscrapers. Now in Hyderabad, we find skyscrapers only in the high-tech city. In Bangalore, you see it in white fields, right? In the near the airport or near the electronic city. But in Mumbai, you can find skyscrapers everywhere. Why? Because there is only vertical expansions. So old structures are demolished and new structures are constructed. So when you give a contract for destruction or demolition of an old structure, that is also considered as what? A construction contract, right? So 3 things to be noted. Sir, a construction contract will include constructing of an asset, architectural services which are directly related to the construction, plus contract for destruction or demolition. So these 3 things will be covered under the definition of construction contracts, right? Now, the most important point why we are learning this case. Now, I have written something, long-term construction contracts. Sir, whenever I talk about these assets which are getting constructed, say whether it is a dam or a building or a roadway or a railway, sir, it takes some years to get completed. Now, people staying in Chennai, Bangalore, Hyderabad, you have seen metro railway construction in your cities. And these metro was constructed over a period of 5 to 8 years, if I'm not wrong. In Mumbai, it took 10 years to complete one phase of metro rail, and that was only 22 kilometers. For 22 kilometers, they took 10 years. So technically, the biggest problem is what recognition of revenue when the contract period is so long. And that is the only reason why this accounting standard is made, AS7. Because here, a very simple concept is used for recognizing the revenue, that is percentage completion method. We'll be talking about this in the next 5 to 10 minutes. So here the logic is, they say that you will recognize the revenue from a construction contract over the term of the contract, over the term or tenure of the contract, on the basis of percentage completion. Means exactly similar of what we learned in AS9 revenue recognition for divisible service contracts. For divisible services, if you remember, for divisible services, we saw that the revenue should be recognized on the basis of percentage of completion. Proportionate completion, here also same logic. So whatever proportion of work is completed by the end of this financial year, that proportion of revenue should be recognized in the P&L account. Whatever proportion is getting completed in the second year, that proportion of revenue should be recorded. And in the third and in the fourth years, and so on. So technically, on the basis of proportion of completion, we will record the revenue in the books of accounts. But that is applicable only in case of long-term construction contracts. Now, many people will say, sir, long-term means any contract which takes more than 12 months to get completed. Because that is generally what long-term word when it comes to you, 12 months is the first thing that you recollect. But here, sir, the concept is something different. Sir, here these contracts start in one financial year and they end up in some other financial year. They start in one financial year and they end up in some other financial year. Then it is called as a long-term contract. Sir, even if the tenure is 6 months, but it starts in 1 year and ends in some other year, then also it will be long-term. Yes, because whenever the situation is like this, the question mark will arise, how much revenue to be recognized in which financial year. Now, say for example, I started a contract in February 21. So Feb 21, March 21 falls in this financial year 2021. Am I correct? And balance 4 or 5 months will fall in the next year, that is April, May, June, July. Say 4 months fall in next year, that is your year 21, 22. So technically, how much revenue should be recorded? Sir, first of all, even if this is a 6 months contract, it will be considered as a long-term construction contract because it starts in one financial year and ends in some other financial year. So technically, in 2 months, you will be doing some or the other work with respect to the contract. So whatever proportion of work is completed in these 2 months, that much revenue will be recorded for this financial year. And the balance revenue will be recognized in the next 4 months, that is your next financial year. So here, please make a thumb rule. Long-term construction contract means such constructions or such contracts start in one financial year, but end up in some other financial year. Then only your AS7 will be applicable. But sir, if say for example, one contract starts in May 21 and ends up in December 21, then will AS7 apply? That is percentage of completion will be applicable? The answer is no. Why? Sir, because it started as well as ended in the same financial year. So when it starts and ends in the same year, entire revenue, 100% of the revenue can be recorded in the year 21-22 itself. So why to apply the proportion method? Are you understanding the point? Entire revenue will be recorded in 21-22 itself. So no need to apply the rules of AS7. Right? So please make a thumb rule. AS7 will be applicable only and only to long-term construction contracts. And such contracts mean they start in 1 year and end in some other financial year. I hope you're getting this point. Right? Now, the next part, that is with respect to types of contracts. So I think you have already completed with your contract costing chapter in costing. And in that you have already learned we have 2 types of contract, a fixed price contract and a cost plus contract. Sir, what do you mean by a fixed price contract? Sir, in a fixed price contract, the contract price is agreed at the beginning itself. Means the contractor and contractor will negotiate the price and fix the contract value at the inception itself, means at the beginning of the contract. And there will always be an escalation clause for the rise in prices, if any. Because, sir, for example, if I lock a contract today for an X amount, right? But tomorrow, after 1 year or 2 years, there is a chance that the material price, the labor price, the overheads may increase. So technically, for that increase, I will demand something from the contractee, because I gave you the quotation, I finalized the price at a certain amount. Say material was 100 rupees, labor was 100 rupees. I finalized on that 100 rupees. But tomorrow, if labor cost go to 130 rupees, material cost go to 140 rupees, so the prices have risen by 30-40%. So technically, I will be putting an escalation clause stating that if a price increases tomorrow for any factor of production, then the contractee has to reimburse for the same. But these escalations are applicable only if they are written. If it is not written, then escalation clause cannot be put in and the contractor cannot demand for the rise in prices. So always remember, whenever it is a fixed price contract, the escalations will always be put by the contractor. The contractor will insist on putting the escalation clause. The contractee may not, but contractor will definitely insist. Because technically, if I am entering a contract today, it is going to complete in the next 5 years. Can I say the material and the labor prices are not going to be same for the next 5 years? Definitely, they are going to change. Yes or no? Like, say, for example, tomorrow the construction work in the country increases a lot, the cement prices will increase. Definitely, it is going to increase. The TMT bars that you use for construction, the stainless steel bars that you use for construction of your building or something like that, definitely the prices rise. So escalations are applicable. If it is written, it will be applicable. If it is not written, it will not be applicable. The second type of contract is cost plus contract. Now, this is a bit different from fixed price. So here the prices are not fixed. Here what the logic is, whatever actual cost is incurred by the contractor, that price, that cost plus an agreed profit margin will be paid to the contractor. Means, say for example, I am the contractor and I incurred 5 crore rupees for construction. So I will be paid that 5 crore rupees plus a fixed profit margin. And that profit margin can be, say, 20% on cost. So if 5 crore is the cost, 20% on 5 crore, 1 crore will be my profit margin. So I will be total getting 6 crores. That is 5 crores for cost reimbursement and 1 crore rupees as my profit. Or it can be a predetermined amount. Say 75 lakh should be the profit that you have to pay me. So whatever is the cost incurred plus 75 lakh will be my profit. That is called as what a cost plus contract. So technically, please apply your brains under cost plus contracts. Under cost plus contracts, escalations don't apply. The reason is you claim the actual cost. So when you claim the actual cost, the price increases are already covered in it, right? Because whatever is your actual cost, say for example, earlier I purchased cement for 350 rupees, but later I purchased cement for 400 rupees. So what is the problem? I am going to charge in 350 rupees also, and I am going to charge in 400 rupees also. So technically, in a cost plus contract, escalations don't apply because you're actually charging them the actual cost incurred from your pocket. Right? Are you understanding this point? But sir, in some cases, in a cost plus contract, there is a ceiling put. Now, what is this ceiling? Sir, ceiling is the upper limit. Upper limit means maximum a particular amount can be spent. Means the contractor will not spend beyond that ceiling. Because if the contractor spends beyond that ceiling, it will not be paid back to him. So in such cases, in such type of contracts, in such type of cost plus contracts, where the ceilings are put, it also takes in the characteristics of a fixed price contract. Because in fixed price contract, the prices are agreed at the inception. Right? But in cost plus contract, whatever actual cost is incurred, that is reimbursed plus certain profit margins. But here also ceilings can be put. Because what will happen? Unnecessarily, the contractor may incur higher cost. Because higher the cost, higher will be his profit margin. Because profit margin is as a percentage on the cost incurred. Right? So the contractor may go for some higher charges so that his profit margins will be greater. So in such cases, the ceilings are applied by the Contractee says beyond 5 crores, you should not spend. If you spend beyond 5 crore, I will not pay you. So please now understand one thing. When the ceilings are put now, they will also demand for escalation clauses now. Because say, I am a genuine contractor and I am willing to spend only 5 crores. But what if the material labor prices increase? Then can I say the prices may go beyond 5 crores, my cost may go beyond 5 crores? Then who will be the responsible in such case? That is why escalation clauses are put if there is a ceiling also kept on in such contracts. See, I've written a point over here. A cost plus contract is a construction contract in which contractor is reimbursed for allowable or otherwise defined cost plus percentage of these costs or a fixed fee. So whatever cost is incurring plus the profit percentage will be given. Generally, no escalation clause is put as actual cost is reimbursed. But if ceiling is put, then escalation clause may arise. So always remember, when a ceiling is put, it also takes the characteristics of a fixed price contract. I hope you're getting the differences between the two. And the major difference between these two is what? Here the prices are fixed at the inception, and here the prices are not fixed. Here whatever is the actual cost plus the profit margin becomes the contract value. So any person with any sort of queries with respect to objective, definition, and types of a contract. Now, as a contractor, which is the best, sir, that depends upon you how you're calculating your revenues and costs. But I would always go for a fixed price contract because I am clear that, yeah, this is the amount that I'm going to get. I would always go for a fixed price contract. And even a contract team will also insist for a fixed price contract.
Hello, sir.
Yes, Suparsha. Yes.
Sir, one doubt.
Yes.
Sir, actually, could you please again say the concept of cost plus contract alone, sir, with ceiling and without ceiling?
See, without ceiling is what? Whatever cost is incurred, that plus profit margin has to be paid.
Okay, sir.
Whatever cost is incurred, that plus my fixed profit margin has to be paid. But when the ceiling is put, ceiling means what? Maximum cost. Means you cannot incur beyond this cost. Means if a ceiling is put, say, for 6 crores. So the maximum cost that you have to incur cannot go beyond 6 crores.
Okay, sir.
If it goes beyond 6 crores, I will not pay you.
Oh.
So in such cases, they also put the escalation clauses because I am a genuine contractor. I don't want to spend beyond 6 crores. But if the circumstances or the rise in prices take the contract cost above 6 crores, then who will be responsible?
Okay, sir. Yeah.
That is why escalations are applicable. Means escalations are generally applied when the ceiling is applied.
Oh, okay, sir. So whether the escalations happen, whether the prices goes up or down, it doesn't matter. In cost plus contract, every contract, the cost is added, right, sir?
Yes, every cost that is incurred, actual cost that is incurred, whether that is a higher price or a lower price, that doesn't matter. You have to add up all the costs together.
Despite the consequences.
Yeah, whatever it, whether the prices have increased or decreased, actual cost will add up. And whatever is the actual cost plus your profit margin, you will claim from your contractee.
Yes, sir. Understood, sir. Thank you, sir.
Yeah, welcome. Anybody else with any other query with respect to this part? Fine, then I'll move ahead. No queries. It seems the concept is clear. Now we'll go for the next part, sir. Here we are discussing from such a long time that, sir, this AS is typically made for recognizing the revenue in the books of accounts. So, sir, what method are we going to use for recognizing the revenue? Sir, it is the percentage completion method. It is the percentage completion method that we have to use, which says that whatever is the proportion of work completed, that proportion means you will be getting a percentage. Means I say that 25% of the work is completed. So technically, 25% of the total revenue should be recorded in the books of accounts as a revenue. So here the most important point is how to calculate the percentage of work completed. And for that, sir, we'll be using this PCM, percentage completion method. And in this, our base for calculating the percentage will be the cost incurred. Because if I'm not wrong, in your costing, contract costing, you used to use a work certified method, if I'm not wrong. You used to get a work certification from a third party. The chartered engineer gives you a work certification, a certificate, like 30% of the work is completed, 40% of the work is completed. And on that basis, you used to recognize the revenue. Here, no need to go outside. You can do it yourself. You have to calculate your proportion on the basis of cost incurred as a percentage of total cost. Cost incurred as a percentage of total cost. That will be your percentage of completion. Now, what it says, construction contracts are mostly long-term. That is, they take more than one accounting year to complete. So here the meaning of long-term contract means what? It starts in 1 year and it ends up in some other financial year. That is why they say it takes more than one accounting year. So when it is taking more than one accounting year, it is a long-term contract. So even if it is only for a period of 7 or 8 months, but it takes more than one accounting year to complete, means 3 months in 1 year and 5 months in another year, it will be a long-term contract. And you have to use the PCM. This means the final outcome, that is the final profit or loss of a construction contract, can be determined only after a number of years from the year of commencement of construction are over. So technically, sir, whatever is my actual profit or actual loss on the contract can be ascertained only on the completion of the contract. But sir, if in the beginning you are calculating any profit or loss, will that be the actual profit or loss, or will that be an estimated profit or loss? Sir, it will be purely an estimation. It will be purely an estimation. So if you are calculating any profit or loss on your contract at the beginning of the contract, it is purely an estimated profit or loss. Because the actual profit or loss you will come to know only at the end of the contract. It is nevertheless possible to recognize revenue annually in proportion of progress of work to be matched with the corresponding construction cost incurred in that year. So technically, whatever cost you have incurred, in that proportion, to match that, revenues can't be recognized. So we will be using this percentage of completion method, which is fair enough to match your revenue with your cost. This method of accounting, called the stage of completion method, provides useful information on the extent of contract activity and performance during an accounting period. So this particular method is very crucial, and this particular method will take care of your matching concept as well, because it will match your revenues with your expenses for the particular period. Now, how it will be matching? Just have a look over here. Just have a look at this example that is in front of your screen. Now, what it says, sir, the contract price is 400 rupees, right? And the contract cost incurred is 100 rupees. And you have further estimated that 200 rupees will be the further cost that has to be incurred. So technically, your total cost is 300 rupees. So 300 is your total cost and 400 is your total contract price. So can I say you can estimate a profit of 100 rupees? You can estimate a profit of 100 rupees. And I'm saying this that it is an estimation. The reason is you are at the inception of the contract, and this is your further estimated cost, which can change in the future. And even your revenue, that 400 rupees contract price that you have agreed today, can also change in the future. So that is why I say you are calculating an estimated profit now. So I will say that your estimated profit is equal to 400 minus 300, 100 rupees. Correct? Now let us check how this percentage of completion is applicable. Just have a look at the formula. Percentage of completion is equal to cost incurred till date divided by total estimated cost into 100. So what is my cost incurred till date? Sir, my cost incurred till date is 100 rupees. Sir. 100 rupees divided by total estimated cost 300. Into 100, the percentage is 33.33%. Means 33% of my work is completed. So technically 33% of the revenue can be recognized in the books of accounts. So the next line, therefore, revenue to be recognized for the year will be 400 is the total contract revenue multiplied by 33.33%. 133 rupees shall be recognized in the books of accounts as a revenue. And if you check the P&L account, the extract of the P&L account will be something like this. On the credit side, by contract revenue, 133 rupees. On the debit side, contract cost 100 rupees. And the net profit of 33 rupees will be recorded. Now, the cost incurred is till this balance sheet date. Cost incurred till the balance sheet date is 100 rupees. And further, you have estimated that to complete the contract, 200 more will be required. So my total cost comes to 300. So my percentage will always be calculated on the basis of cost incurred till date divided by total estimated cost into 100. Now, sir, please remember one thing. This percentage that you are calculating is a cumulative percentage. Now, this was the first year. You got 33.33%. Right? Now, in second year, say you get the answer at 60%. So that 60% is cumulative. Means it also includes the 33% of the first year. Right? So revenue recognition in the second year becomes very crucial. Because say for example, in the second year, the percentage completion, this is just an assumption. Say your percentage completion comes to 60%. Then how much revenue will you recognize? Sir, people will say 400 multiplied by 60%. But sir, please understand, this 60% is the cumulative figure. Out of this 33% revenue is already recorded in the last year. So you cannot again record it. So what you have to do is minus revenue already recognized. So 133 was revenue already recognized. Are you getting this point? So this is very crucial from the second year. So in the first year, it is no problem. First year, directly you can do contract value multiplied by percentage of completion. But when it comes to the second year, third year, and fourth year, your contract value multiplied by the percentage completion, but you have to also subtract the revenues recorded earlier. Because when you subtract the revenues recorded earlier, the cumulative effect gets killed. So here my answer will be 107. So in the second year, 107 will be the revenue to be recognized. And whatever cost in the second year you have incurred, say 80 rupees cost you have incurred, 80 rupees debited to P&L, 107 credited to P&L, difference 27 rupees profit to be shown in the second. So this is how technically the percentage of completion is applied. It's a simple formula. Cost incurred till date. Till date means up to balance sheet date. So first year balance sheet date, second year up to balance sheet date, third year up to balance sheet. Because when I say cost incurred till date means it is the cumulative cost. Cost incurred till date means if you have started the contract from last 2 years, so total cost of 2 years is called as cost incurred till date, divided by the total estimated cost. So this percentage will always be a cumulative percentage. This will be what? A cumulative percentage. So to cancel the cumulative effect, from the second year onwards, you will start subtracting. When you decide the revenue to be recognized from the second year onwards, you will start subtracting the revenue already recognized. So please copy down this simple example. Please copy down this example. Please copy down. So I hope you have copied this down. Let us go ahead now. Now we'll be discussing something theoretical with respect to this chapter, and questions are raised from this theoretical point. That is with respect to combining and segmenting construction contract. Now please understand, sir, as per AS7, the profits or losses of the contract should be calculated separately. Means if, say, for example, I am entered into 4 different contracts. So technically, for all the 4 different contracts, unless they cannot be combined as one single contract, for all these 4 different contracts, I have to calculate the profit or losses separately and account them separately. Means technically, every construction contract should be accounted separately with respect to their revenue, with respect to their cost, and with respect to their profit or losses. But there are chances where such assets, such 4 assets, can be combined together to form one construction contract. There is a possibility. Right? So technically, what is the logic? As per AS7, if you are entering into different construction contracts, account them separately. Means account their revenue, account their cost, account their profit or losses separately, irrespective of the results of any other contract. Separate, you have to do the accounting. But sir, there are situations where you might have entered into 4 different contracts, but you can combine all the 4 contracts together as one single contract for the ease of accounting. And when that can be done, that is called as combining contracts. Means you are constructing 4 different assets, so there are 4 different contracts, but you can combine them together as one single contract. That is one possibility. And second possibility, you have entered into one single contract. You have entered into one single contract, but for constructing 4 different assets. So one contract for 4 different assets, and these 4 different assets can be treated as 4 different contracts for accounting purpose. That is called as segmenting contracts. Segmenting means dividing one contract into 4 different contracts. When that can be done? Now, please understand. A contractor may undertake a number of contracts. The standard identifies certain cases where, for the purpose of accounting, only for the purpose of accounting, please understand, more than one contract can be taken as one. 2 or 3 contracts can be combined as one contract. That is called as combining the contracts. And a single contract can be taken as to comprise of more than one contract. Means your one single contract can be divided as 4 different contracts. That is called as segmenting the contract. Now, when can you segment and when can you combine? There are conditions. So first, let us have a look for conditions for segmenting contracts. What they say? When a contract covers a number of assets, the construction of each asset should be treated as a separate construction contract if, point number 1, separate proposals have been submitted. Means, say for example, I have to construct 4 buildings. I have to construct 4 buildings under one contract. Right? Say for example, Hindustan Construction, HCC, Hindustan Construction Company gives me a contract that you have to construct 4 buildings. I said, fine. All the 4 buildings are covered under one contract. But sir, when I entered into the contract, I have submitted 4 different proposals for 4 different buildings. Point number 1. Point number 2, each and every proposal can be negotiated separately. And both the customer as well as the contractor both have the option to deny any part of the contract. Means, if I have submitted 4 different proposals, and HCC, Hindustan Construction Company, does not want me to construct the 4th building. Why? Because the prices are too high. So HCC tells me, sir, you construct only 3 buildings, 4th building you leave on us, we will do it by our own. That is called as separate negotiations. And point number 3, because separate negotiations are possible, the cost and the revenue can be identified separately for each and every building. If these 3 conditions are satisfied, even if you have entered in one single contract for construction of 4 buildings, all the 4 buildings should be treated as 4 different contracts. So when you account them, treat them as 4 different contracts, not a single contract. And what is the reason for considering them as 4 different contracts? First, I have submitted separate proposals. All these separate assets will be negotiated separately. Means there is no dependency. Like if one is to be done, then second also has to be done. No. You can cancel any of the 4 buildings. And point number 3, point number 3, the cost and revenues can be identified separately. If these 3 conditions are satisfied, you can definitely segment your contract. So one contract can be broken up into different parts depending upon the different assets. That is called as segmenting. So when can you combine? When can you combine? So it is exactly opposite. A group of contracts, whether with a single customer or with several other customers, can be treated as a single construction contract. Now here, please understand. Sir, Lodha Constructions, one of the biggest construction companies in the country for residential and commercial complexes. So Lodha people called me up. They told me, sir, you have to construct one building in Whitefields, Bangalore, one building in High Tech City, Hyderabad, and one building in BKC, Bombay, Bandra Kurla Complex, BKC, Bombay. 3 buildings have to be constructed, right? And all the 3 buildings are 3 different contracts. But sir, technically, I had paid the tender for getting the contract as a one single contract only. Technically, the specifications of the buildings are also same. The profit margins that I'm going to charge for the buildings are also same. And all the constructions, all the 3 constructions will be completed concurrently or continuously because I have to give the delivery at the same time. So if these conditions are satisfied, then why to take them as 3 different contracts? Rather take them as one single contract. So what made me take these as one single contract? Sir, 3 points. First, I have bid for these contracts as a single proposal. For all the 3 buildings, whether they are different contracts, but a single proposal was submitted. The profit margins for these buildings were actually the same, right? And point number 3, the contracts will be performed concurrently or continuously. So if these 3 conditions are satisfied, then the 3 buildings as 3 separate contracts that I have signed will be considered as one single contract for the purpose of accounting. So Whitefields, High Tech City, BKC, all the 3 assets are at 3 different locations and 3 different contracts I have signed. But for my accounting purpose, all these 3 contracts will be taken as one single contract. Now, this is with respect to only one single customer. Now, some people will say, sir, how can several customers' contract can be taken as one single contract? How is that possible, sir? Because that will be a question mark for you. Now, assume Maharashtra government has given me a contract for affordable housing projects. Maharashtra government gave me a contract for constructing 2 buildings, affordable housing. Karnataka government also gave me 2 buildings project. And Tamil Nadu government also gave me 2 building project. And Telangana KCR also gave me 2 building project. So these are contracts that I have received from 4 different customers. Yes or no? All 4 different governments. But sir, end of the day, these are what? Affordable housing projects. So technically, all the buildings might be of same nature. Right? Because government buildings, you know that the structures are same. So the cost incurred will also be same. Technically, the profit margins will also be same. So even if these are 4 different contracts from 4 different customers, for my ease of accounting, I can consider them as one single contract. I can combine them together. I hope you're getting this point. Combining and segmenting. If anybody with any query with respect to combining and segmenting of contracts, please raise immediately. Sir, I'm not going to provide them the land. Land will always be provided by the government. I just have to construct the building and give it to them. In such cases, the land is never provided by the contractors. Sir, here the contract is just for construction. Land acquisitions and all will be done by the contractor only. And please understand, a contractor is a person who gets the contract to construct. A contractor is not the person who is self-developing and then selling it. Means, say for example, Lodha Constructions, they construct their own buildings and they sell it to the customers. For them, AS7 is not applicable. Why? Because here there is no contractor-contractee relationship. Are you understanding my point? But if I am getting a contract from Lodha to construct a building, then it becomes a construction contract. Why? Because Lodha is the contractee, I am the contractor constructing the building. And I will hand over the building to the Lodha group again. Yeah, that is real estate business. It's absolutely correct. That is real estate business. And here we are talking about construction contracts. So both are different from one another. Can you repeat the different customer? See, even if it is a single customer or a different customer, it doesn't matter. Point is what? The assets that you are constructing, should be of the similar nature, similar grounds, with overall common profit margins, right? Proposals are given at the as a single package. For various customers also, proposals are given as a single package, and the contracts are performed continuously or concurrently. So even if it is with one single customer, even if it is with different customers, it doesn't matter. I hope you are getting this point. Now, the next important point that we need to discuss is with respect to additional asset. Contractor point. Please elaborate. Sharmila, please raise your hand and ask very clear. Directly raise your hand and ask. I'm not able to understand what you've written in chat. Please raise your hand and ask it. Yes.
Sir, will you please explain once again that single customer and all? I got confused, sir. Single contractor, that several parts and all, sir. That part alone, will you explain it again, sir?
Segment combining contracts.
Yes, sir.
Which
that
part
alone
is
will
not
be.
See, please understand one thing. Combining means what? You have entered into 4 different contracts. Technically, you have signed 4 different contracts for constructing 4 different assets. Can you combine them together and account them as one single contract? That is the question which is arising. Because technically, as per AS7, different contracts that you enter has to be accounted separately. But when you account so many contracts, it creates a problem for you. So can you combine them? The answer is yes. You can combine these contracts only if these points are cleared, if these conditions are satisfied. What is the condition? The group of contract is negotiated as a single package. Means moreover, the terms and conditions of the contracts are very much same. The contracts are so interrelated to each other that in fact part of a single project with an overall profit margin, means the assets are very much closely related to each other, of same specification, same kind, same characteristics. Even the profit margins that you're going to earn on it are exactly the same. And thirdly, the contracts that you're going to perform are continuously or on concurrent basis. So if these 3 conditions are satisfied, even if you have signed 4 different contracts, it will be considered as one single contract for accounting purpose only. For accounting in the books of accounts. Right? And this can be with a single customer also, and this can be with several customers also. So with, say for example, you have entered into contracts with 3 or 4 different customers, but if the characteristic specifications are same, then even if it is with 3 or 4 customers, you can still combine your contracts. That is allowed, that is possible. So it doesn't matter that it should always be one single contractor only. Sorry, one single customer only. It can be several customers also. I will go for the third and the last point. May exist. Why not? There is a chance. It may exist. Point number C. Now this is with respect to additional assets. Means what happens, sir? You have entered into a contract to construct a particular asset. When the work is going on, the contractee may give you some additional work. Means he may tell you to construct some additional asset. So now the question mark is, should this additional asset be treated as a separate contract, or should it be considered as the part of the original contract? Sir, that totally depends upon the characteristic of the additional asset that is to be constructed. If the additional asset technically differs from the original asset, it is completely different from the original asset, and the additional asset's value has got nothing to do with the original asset, means you're definitely going to be get paid for the additional asset also, then you can consider this additional asset as a separate construction contract. But if technically it is the same, means it is just expansion of the existing contract. There is no new asset coming in. Only this existing asset is only expanded. So in that case, the additional asset will not be treated as a separate contract. It will be rather considered as the same construction contract only. I'll give you best example for this. Say you got a contract for constructing 10-floor building, right? After 1 year, 5 floors are completed. And now the contractee comes and tells you that, sir, please construct 5 more floors and make it 20-floor building. So can I say 5 floors is an additional asset that he wants you to construct? Are these 5 floors technically different from those 15 floors? Sir, no, it is the part of that building only. So characteristic wise, technically wise, it is not different. It is the same expansion of the same building. So here, even if you are constructing 5 floors, which is an additional asset, it will not be treated as a separate construction contract. Rather, it will be shown as the same contract only. But on the other hand, if the contractor says that you construct that 15-floor building, but there is a land vacant over here, you please construct a G+2, that is ground plus 2 bungalow for our supervisor. Now, can I say this bungalow is different from the original asset in terms of specification, in terms of size, everything you say? Can I say it is completely different? In that case, this separate building that you have to construct for 2 floors for your supervisor will be taken as an additional asset, separate asset, and a separate construction contract. It will be treated as a separate construction contract. So what it says, a contract may provide for the construction of an additional asset at the option of the customer, or may be amended to include the construction of an additional asset. The construction of the additional asset should be treated as a separate construction contract when the asset differs significantly in design, technology, or function from the asset or assets covered by the original contract, or the price of the asset is negotiated without regard to the original contract price. So if any one of the 2 conditions are satisfied, you can definitely say it is a separate construction contract. So what are the conditions? Sir, first condition is it is technically different from the original asset, and second, the prices are also negotiated separately. Means the prices has got nothing to do with the original asset. And I'll give you one more example for this. Now say you have been given a contract to construct 5 kilometers of national highway. Right? Your work was superb. So Nitin Gadkari, the transport minister, union transport minister, gave you an extension that 5 kilometers you constructed, superb. Please construct 3 more kilometers. Now, can I say technically that 3 more kilometers will also be of the same specification like that 5 kilometers road only? So I know it's an additional 3 kilometers, but it will not be treated as a separate asset. Rather, it will be considered as a same contract only. Because obviously you are going to get paid for that 3 kilometers also. But in the same proportion, you are going to get paid what you got paid for the 5 kilometers. So separate negotiations and all are not required. You will be paid in a similar manner only. So it is not a separate construction contract to be treated. Right? But Nitin Gadkari is happy with your work and he says that, will you construct railway for me now? And he tells you to construct a 3-kilometer railway line. Now, can I say that is a completely different asset that you have to create? It will be treated as a separate construction contract. I hope you are getting this point. And whatever points we learned are very, very important from theoretical point of view. Theory questions can be arised from this A, B, C points, combining and segmenting of contracts. So point number A, we talked about the segmenting of contract. Point number B, with respect to combining the contract. And point number C, with respect to additional assets. So anybody with any query till here? Now we are moving to the practicality of the topic. That is profit or loss on contract. And then we will go for recognition of the revenue and recognition of the cost. Now, sir, in simple terms, profit or loss on contract can be calculated by a simple formula. Contract revenue minus contract cost. So it is very important for you people to understand what is included in the contract revenue and what is included in the contract cost. So we'll be first discussing about contract revenue and contract cost, right? And if you remember, I also told that as per AS7, the profits or losses on the contract should be calculated separately for each individual contracts unless they have not been combined together because of the common profit margins or any points that we learned. So unless it is not combined, you have to calculate the profits of each and every contract separately. And no profits or losses of one another contract can be set off against each other unless they have not been combined. If combined, then you will be calculating the overall profit or loss of that combined contract with respect to accounting purpose. But if it is not combined, it is separate contracts, segmented contracts, then each and every contract's individual profit or loss has to be accounted. And you cannot say that, sir, in contract B, I have a profit of 100 rupees and in contract B, I have a loss of 50 rupees. So I will set them off together and in the P&L, I will record net profit of 50 rupees. No, sir, it is absolutely wrong. Show that 100 rupees of net profit separately and 50 rupees of net loss separately. So in the P&L, you will show them separately. At the end of the day, in P&L, if it gets set off, that is a different story, but you have to show them separately. Separate disclosure is to be given. Right? So what it says, the profit or loss is to be calculated for each contract separately. But when a group of contracts have been negotiated as a single package with an overall common profit margin, then all such contracts put together would be treated as a single contract. That is called as combining contract. We've already learned. To calculate the contract profit or loss, contract revenue and cost must be calculated. So let us now calculate what do you mean by contract revenue. So sir, you can see on your screen, there are 5 points, A, B, C, D, E. These 5 points comprise of the contract revenue. So what are these points? Sir, point number A, the agreed price. The agreed price means the value which is fixed in a contract, the fixed contract price. That is the first point. Second, claims arising due to escalation. So because of the escalations, you may claim from your contractee for the price rise. So whatever you are claiming for escalations also becomes your contract revenue. Point number 2. Point number 3, claims for reimbursement of cost not included in the contract price. Now please understand, in your contract, your entire scope of work is written, that whatever work you're going to do, everything will be written in that contract. Assume your contractee tells you to do a work which is not written in the contract. So technically, if it is not written in the contract, the value has to be settled separately, yes or no. Now say for example, in your contract, electrical work was not written, but the contractee out of good faith tells you that, sir, you are doing such a wonderful work. I know I have not given you the work for electrical, but can you please do the electrical work for me? I know it is not written in the contract, but will you please do it for me? I said, fine, sir, you are a good person. I will do it for you. So I did the entire electrical work of the building, which costed me 2 crore rupees. And technically, I will be claiming the reimbursement of this 2 crore rupees from the contractee, because that is claim of reimbursement of cost not included in the contract price, because this electrical work, 2 crore rupees, that cost I have incurred was not included in the contract value. That is why I'm going to take a separate reimbursement of it, and that will become my revenue. I hope you're getting this point. Point number D. Increase or decrease in revenue due to change or variation in the scope of work to be performed. Now here, already something is written in the scope, like this work is to be done in this way, but you can change it. Variations can be put. The best example, sir, contractee first agreed that there should be marble flooring done for your building, marble flooring. But now the contractee is changing the scope, and contractee says that no, marble flooring ille, I want vitrified tiles, Johnson vitrified tiles. Now, sir, technically, marble flooring costs 60 rupees per square feet, and Johnson tiles cost 130 rupees per square feet. So technically, 70 rupees is increasing. Why? Because you have changed the variation. There is a variation in the scope of work. So this will also be a revenue for you, because you will do the work as per his requirement. But definitely, you are also going to charge from it. So you will charge the difference of 70 rupees as change or variation in the scope of work. And last point number is incentive. The incentives means generally if the work is completed on time or before time, the contracting may give some incentives to the contractor. Say 2% of the contract value will be given as incentive, or 5% of the contract value will be given as incentive. Now, sir, please understand, if incentives are given, penalties can also be charged. Penalties can be charged if there is a late completion, sir. That is also possible. So please understand this. So these are the 5 contract revenues. But sir, please understand one important point. Point number A can be recorded. Why? Because it is written in the agreement. But from point number B, C, D, and E, these can be recorded as your revenues only if you are 100% certain about its ultimate collection. If you are 100% certain about the ultimate collection, then only you can recognize the revenue in the books of accounts with respect to point number B, C, D, and E. That is escalation claims, reimbursement of cost, changes, increase or decrease due to variation in work, and incentives. For all these 4 factors or all these 4 points, you can recognize the revenue only if the ultimate collection is possible. But if ultimate collection is not possible, then you cannot recognize the revenue. At least now, you have to postpone it to the future. And you have to postpone till the uncertainty becomes certain. I hope you're getting this point. Now, let us discuss the contract cost. Now, sir, in simple terms, I'll say any cost which is directly attributable to the construction is your construction cost. Means your direct material, your direct labor, your direct overheads, right? These are all your contract costs. Plus, there are some allocable cost also. Allocable cost means indirect expenses. For example, the insurance of the site, depreciation on the plant and machinery that you're going to use for your construction purpose, then design and technical assistance expenditure specifically chargeable to the contract, then transporting your transport cost of transporting your plant and machinery from one site to another site. These are all certain examples of contract cost. But your contract cost will exclude the following 4 points. Administration cost, your general office administration cost, unless it is not the part of the contract, it will not be included. If it is a part of contract, then definitely it can be included, but it has to be excluded. Second, selling and distribution cost means advertising and all. If you're doing selling and distribution, will not be added up to the cost of contract. Third, research and development cost will not be considered over here because research and development cost may be recognized as an intangible asset. We will learn it in AS 26. And point number 4, depreciation on idle plant and machinery. Now, what do you mean by depreciation on idle plant and machinery? Sir, please understand, you have kept some machinery at your work site, but it is never used. You thought it will be used, but it is never used. But depreciation has to be charged on that asset. So if you are charging depreciation on such asset which is kept idle, you please debit it to the P&L account. Don't record it as the contract cost. Right? You debit it to your normal P&L account, but don't debit it to your contract cost. It will not be treated as your contract cost. Then, costs incurred in securing contracts and pre-contract costs are included in the contract cost if it is probable that the contract will be obtained. Otherwise, they will be charged to P&L account. Best example is earnest money that you pay to secure contracts. You pay commissions to the agent to secure the contracts. When you go and fill a government contract, tenders you fill in, you have to pay a non-refundable deposit. Those are all what? Pre-contract costs or costs incurred to secure the contracts. So if you receive the contracts, all these costs becomes your contract cost. But if you don't get the contract, it will be directly debited where? To the P&L account. It will be directly debited to the P&L account. Right? Then, interest costs can be included in the contract cost if the asset is a qualifying asset as per AS 16. Now, you have already talked about qualifying asset in AS 2 and AS 13 also. If the asset takes substantial period of time to get ready for its use or sale, it becomes a qualifying asset. So technically, all these construction contracts, whatever assets you are going to construct, will take substantial period of time. whether it be dams, whether it be building, or whether it be railway, it is going to take substantial period of time to get ready for its use. So technically, all these assets are qualifying assets. So if any interest on loan is paid, that interest can be capitalized. That interest can be shown as the contract cost as well. But it should take substantial period of time. That is 12 months or greater. If a contract gets completed in 6 months, then it will not be considered as taking substantial period of time. So interest cost cannot be added. Any query with respect to contract cost and contract revenue? Yes, penalty will be deducted not from the cost but from the contract revenues. So it is as good as a cost.
So regarding the incentives and penalties, should they be mentioned in the contract before, sir?
Definitely, yes. Yes, it will be mentioned in the contract.
Oh, should be mentioned or?
See, if it is mentioned, then only the contractor will have a motivation to complete the work on time or before time.
Yeah, okay, sir.
See, if your papa or your mummy tells you that if you score a rank in CA Inter, you will be gifted with a safe Kia Seltos car. So you would be very happy and you have a motivation to work hard. Am I correct?
Yeah, yes, sir.
So you will work hard for the Kia Seltos. You will try to fetch a rank at CA Inter level. So definitely all these things are mentioned in the contract at the inception only.
Yeah.
Because this gives a motivation.
Absolutely. Thank you, sir.
Right? Welcome. Anybody else with any doubt or query with respect to contract cost and contract revenues or exclusions? Shall we go ahead then? Now we are going for the most important part, that is the recognition criteria of the revenues, cost, profits and losses in the books of accounts. See, I gave you an example of doing that electrical work. See, you can take any example, like whatever cost you have incurred, but that is outside the scope. So you are getting a reimbursement for it. So if any cost that you are incurring, which is outside the scope of your contract, you are definitely going to charge a reimbursement for it. So you can put any example of your choice. There is no specific example for it. I give you an example with respect to electrical fittings. The meaning of securing contract means to get the contract. To get the contract means secure means what? To get it. He said, I have to secure this work. Secure this work means what? You have to get that work. So to get that work, you appoint an agent to whom commission is paid or a broker is put in between. So that broker or the agent will give you the amount and you pay some cut to the MPs or MLAs also. But the cut that you pay to the MPs or MLAs, that is not in white, that is in black. Right? That is all called as securing the contracts. Or sometimes you may also have learned that if you want the contract, then you have to take the raw materials from the companies of the relatives of MPs and MLAs. And they charge you at a very high price. That is only their commission. 10 rupees of raw material, they will charge you 18 rupees. So the 8 rupees extra that you're paying is nothing but the commission. But that is all what we say, not the correct way of transacting. Now moving on to the recognition criteria. Now, sir, very, very important. Everybody, please focus. Don't write anything. Please focus. Very important. Now, sir, for every construction contract, at the end of first year, you have to work out the result of the overall contract. Result means you have to work out the profit or loss from the overall contract, which will be purely an estimation. So there are two possibilities. Possibility number one, you can either work out, or possibility number two, you are not in a position to work out. Means it is not that information is not that clearly available, whether you can calculate the overall result of the cost, overall result of the contract. The information is not available with you. You don't know what will be the future cost, or you don't know exactly how much cost has to be incurred. So means I can say that you cannot reliably calculate the outcome of the project. So if that is the case, means if you cannot calculate the outcome of the project reliably, outcome means profit or loss of the project reliably, then AS7 says that whatever cost incurred in the current year, that cost has to be recorded in the P&L. And the same revenue also has to be recorded in the P&L. Means 100 rupees cost you are debiting to P&L, then only 100 rupees revenue should be credited to P&L. Means technically no profits or losses have to be recorded at this point of time at least, because you cannot reliably estimate the overall outcome. So overall outcome can be recognized only at the end of contract. So technically the profits and losses will be recorded at the end of the contract. So for all these 3 or 4 years, whenever the contract is going on, whatever cost you are incurring, the same proportion of revenue will be recorded. So technically no profit or loss will arise in the first 2, 3, 4 years. Whatever the profit or loss will come at the end. So sir, see what they write. When the outcome of a contract cannot be reliably estimated, then revenue should be recognized only to the extent of cost incurred and of which recovery is possible. Recognition of revenue and expenditure in construction contract is based on estimates, and changes in such estimates on year to year are accounted as a change in accounting estimate as per AS5. And I'll teach you what are changes in estimate as per AS5. Right? So please understand one thing. If the overall outcome or the overall result of the contract cannot be ascertained reliably, then revenue can be recognized only to the extent of cost recorded. So if I have recorded a cost of 500 rupees, revenue can be recorded only to the extent of 500 rupees, which can be collected, whose ultimate collection is possible. So if I say that no sir, 500 rupees, only 450 rupees revenue can be collected, sir. 50 rupees is doubtful, sir. So what you have to do, recognize only 450 rupees. And 50 rupees, you can create a provision for doubtful debts. Right? But sir, this is not the agenda for us, because questions are not raised from this point. Questions are raised from this point where we say that the outcome of the contract can be reliably estimated. Means at the inception, you can calculate the profit or loss of the contract. Now, sir, if there is a profit on contract, if there is an overall profit on contract, then what they say recognize the cost on actual basis. Means whatever is incurred for the current year, that cost has to be recorded on actual basis, and the revenue should be recognized based on the percentage of completion. And we have already learned how to calculate the percentage of completion. So for calculating the percentage of completion, we will use the cost to cost method. There is one more, survey of work performed, means a third party will survey and he will tell you how much the work is performed, and completion of a physical proportion of the contract work, that is your work certified method. But we will go with what? Cost to cost method. That is, compare the total cost incurred till date with the total estimated cost of the contract. So your percentage of completion formula is what? Cost incurred till date divided by cost incurred till date plus cost likely to be incurred. So the total of the denominator is nothing but total estimated cost. Your total of the denominator is nothing but the total estimated cost. Right? So on this basis, we are going to record the revenue, and the difference between the revenue and cost will be definitely a profit. See, when you say there is an overall profit on contract, every year certain proportion of that profit will be recorded. And after 3 or 4 years, your total profit will be more or equivalent to your estimated profit. It can be lesser or higher also depending upon the estimations if they change in future. But no losses can arise in between. Means you cannot say that in third year I am getting a loss. Not possible, sir. Not possible at all. Why? Because whatever cost you have incurred, you will having a proportionate revenue to be recognized, and the revenue will be greater than the cost. Because the revenue that you are going to record is calculated on the basis of cost that you have incurred. But if something abnormal happens, now this is hypothetical now, where the cost is actually exceeding the total revenue, then a loss may arise, but that is hypothetical. In very few cases, such things may happen. You were earlier having a profit, But at the end of second year, there is an overall loss on contract. Then in such case, the losses has to be immediately recognized as an expense. So whatever profit you recorded in the first and second year, no problem, sir. Now you have to record the entire loss. But very hypothetical case, and at least at inter level, such questions will not be asked because your levels are not that high as of now. But you go to final, such things will definitely come because there we'll be learning again AS7 in much more detail, and we'll be learning the relevant Ind AS also over there. So that will cover some other extra parts also, right? But sir, the point arises. The point arises, what if there is an overall loss on contract? Sir, if there is an overall loss on contract, as per AS7, entire loss has to be recorded in the first year itself as an expenditure. What it says, when it is probable that the total contract cost will exceed the contract revenue, expected losses should be recognized as an expense immediately, irrespective of whether the work is commenced or not, whatever be the stage of completion, whether you are having profits on some other contracts. So at the end of first year, when you estimated the outcome, you are in an opinion that, sir, we are at a loss. Our costs are increasing the revenues. So we are technically at a loss. Can I say some or the other proportionate loss will be recorded? But the balance loss has to be provided. You have to record the entire loss in the first year itself. Irrespective whether you have started the work or not, whatever be the stage of completion, even if 2% of the work is completed, no problem. You have to record the entire loss. And third, even if you have profits on some other contract, still the loss has to be recorded. Still the loss has to be recorded. And how? I'll just show you. Now, last one more point, and then I'll take you to a practical example where revenue is already recognized, but now its ultimate collection is not certain. Then bad debt should be recorded for the same. If in future, again, the amount is recovered, then it should be recognized as a recovery of bad debts. So say, for example, some escalations were accepted by the contractor, accepted by the contractee, and you recorded that escalation as a revenue in your books of accounts. But later the contractee said that I will not pay you. So it is like that. At the time of raising the claim, it was certain. But when collection was to be done, it is becoming uncertain. So if it is becoming uncertain, you can record a bad debts for it. But if in the future, again, the recovery is done, record as a bad debts recovered. Don't record it as a contract value now. Record it as a bad debts recovered. Right? Now I'll take you to a practical example where you will understand how exactly the things work. I'll just solve these examples again for you. Everybody, please focus on the examples. First, I'll go with if overall profit on contract. Fine. Your contract price is say 600 rupees. Contract price is 600 rupees. Cost till end of first year 250. Rather, I'll say 200. Further estimated cost 300. You have estimated that a further cost will be 300. So 500 is the total estimated cost. 500 is the total estimated cost, and please trust me, this 300 that you have estimated at the end of first year can change by the end of second year because it is an estimation. Estimates are bound to change depending upon the situations. Right? So can I say, therefore, overall profit on contract, overall profit on contract That will be 600 minus 500. So you have 100 rupees overall profit on contract. So if there is overall profit on contract, the cost should be recorded on actual basis and revenue will be recorded on the PCM basis, percentage of completion method basis. And whatever is the profit arising, proportionate profits will be recorded. So we'll quickly take 3 years, right? This is the first year going on. So first I will always calculate percentage of completion. So here I will say the cost incurred till date is 200 divided by total estimated cost is 500. So my percentage of completion comes to 40%. So therefore, revenue to be recognized. How much revenue will I recognize? Sir, I will say 600 is my total revenue multiplied by 40%. Sir, 240 is the revenue that I will record. Right? So, sir, if I make a small extract of the profit and loss account, I will show by contract revenue 240 to contract cost 200. So technically to net profit 40 rupees. I hope everybody is clear till here. No controversy at all. Very simple. Now let us go for the second year. Right? Now second year, sir, my contract price is 600. But sir, there is something getting added because of variations. Now can I say is variations possible? Yes, sir. Variations are possible. So because of variation, 50 rupees gets added up. So now my contract value is 650 rupees. Right? This is absolutely possible, sir. No problem at all. Now, cost incurred for second year. Sir, for second year, I incurred 150 rupees. How much? 150 rupees. Plus cost incurred in first year. Sir, in first year, I had already incurred 200 rupees. So 350 is what you know? Cost till date. Am I correct? Cost till date means when I started the contract till today. 350 is the total cost. Plus estimated further cost. Now, sir, estimated further cost technically should be how much? Should be 150. So that my total cost will come to 500. But sir, I'm making a small change. 175. It can happen. Why? Because sir, here variations have been added. So for variations, revenue I'm going to earn. So cost will also be incurred, right? So here I have made a change. That is possible. Question can give you this way. So 525 is now your total cost. Right? So here my revenue and cost both change in the second year. Sir, no problem. I will calculate the percentage and accordingly on that basis, I will record the profit. And here also I can see there is an overall profit of 125. Till last year, the overall profit was coming at 100, but now the overall profit is coming to 125 rupees. Right? So technically by the end of third year, 125 will be recorded, not to worry. Now, if I make the percentage of completion, what will I say? Sir, cost incurred till date is 350 divided by total cost is 525 into 100. So what is the value? Just anybody please calculate and tell. Please give the answer. What will be the percentage? Write in the chat box. 66.67%. Okay, thank you. So therefore, revenue to be recognized. Now here comes the most important point. Sir, 650 is the total revenue multiplied by 66.67. But please understand this is cumulative. So from here, I will subtract whatever is recorded in the first year, that is 240. This is the most important crux. Because if you don't subtract 240, what will happen? 240 will be recorded once again. Twice recording will happen. What is the answer for this? Anybody? Answer for this? Exactly 193? Give me the proper answer. It is 193.35. Okay, thank you. So if I make a PNL now, By contract revenue 193.35. To contract cost 150 incurred for the second year. So to net profit balancing figure 43.35. Tallies at 193.35. Right? This is the second year. Now, sir, I'll quickly wind up the third year, assuming everything remains in the third year. Right? So in the third year, cost incurred will be exactly 175. Right? So percentage of completion, no need to calculate because my entire work is completed. So percentage of completion has to be 100% in the third year. Right? So therefore, revenue to be recognized. So how much revenue shall I recognize? Sir, it will be 650 into 100%, but I have to subtract minus 240 minus 193.35. So can anybody please tell me the answer for this? 216.65. So if I make a small P&L extract over here, I will show by contract revenue 216.65 to contract cost 175. So how much is net profit? Last year net profit, can anybody please tell me the net profit? 41.65 and tallies at 216.65. So now, sir, if you take the total of profits, it will be 125 rupees. And the total contract revenue is 650 and the total cost is 525 recorded over a period of 3 years. I hope you are cleared with this point. Till where have you recorded this, or you have not yet recorded any part of this? Have you recorded this or not recorded any part? And go for the second part where the overall result is a loss. Second example, example number 2. Overall loss on contract. Contract price is say 800. Cost up to first year, say 350. Further estimated cost is say 600. So 950 is the total cost. $950 is the total cost. So therefore, overall loss on contract. How much? So 950 minus 800. So there is an overall loss of 150 rupees. Now, sir, technically, as per AS7, this entire loss of 150 rupees should be recorded in the first year itself. But, sir, as per the actual cost that I've incurred and as per the PCM, whatever the revenue that will be recorded, entire 150 loss, how can it come in the first year only? Only certain part of this loss, 30, 40 rupees or 50 rupees loss may be recorded in the first year. So what to do with the balance loss? Sir, for the balance loss, you have to record it as an expense immediately. Means you have to create a provision for loss. You have to create a provision for loss. Now see how you will create. So first what I'll do is, first I'll calculate percentage of completion. So what is percentage of completion? Sir, 350 cost incurred divided by total cost 950 into 100. Can anybody please tell me the answer for this percentage? 36.84%. 36.84%. So therefore, revenue will be how much? 800 multiplied by 36.84%. Can anybody tell me the answer for this? 800 multiplied by 36.84%. 294.72. 294.72. Right? So if I make a PL account over here, I will say by contract revenue 294.72, and on the debit I'll say to contract cost 350. So technically people will say by net loss. What is the difference between these two? What is the difference between these two? People will say a net loss of 55.28 should be recorded. But sir, as per AS7, I should be recording the entire loss of 150 itself. Right? So to record the entire loss of 150 means technically, my net loss over here should be 150. So how will I reach to 150 over here? Sir, you have to create a provision for loss. To provision for loss, that is nothing but 150 minus, you got 55 point, how much you got? 55.28. So what is the difference between these two? 94.72. So 94.72 provision for loss has to be created. Right? So when you create this provision, the total loss of 150 will get recorded in the first year itself. Now some people will ask me, sir, what I should do in the second year? Because in second year again net loss will come. So shall I record the net loss again in second year? Sir, no. Technically you have recorded entire 150 in the first year itself. So in second year, sir, if loss arises, what shall I do? Sir, please adjust it against the provisions. So in the second year, if the loss is remaining constant, means the contract price and contract cost do not change. So the proportionate loss will come, no problem. But sir, if the contract price or the contract cost changes in the second year and losses are further increasing beyond 150 or losses are decreasing less than 150, whatever adjustments are to be done will be made in the provision account only. Means if because in the second year cost increases by 20 rupees, your overall loss comes to 170. So technically what you have to do, increase your provision by 20 rupees. So when you increase your provision by 20 rupees, your net loss figure will be 170. Right? But if in the next year the contract price increases by 30 rupees, but cost do not increase, so technically your overall loss will come down by 30 rupees. So you will just reverse the provision by 30 rupees. So when you reverse the provision by 30 rupees, technically your losses are reducing by 30 rupees. So whatever has to be done will be done in your provision account only. No changes to be done in any net profit or net loss figure, and only change your provisions. Now say assume, I'll show it to you. In second year, the contract price is 800 plus variation 50, 850, right? Cost in second year, say 300. Cost in first year was 350. Just a minute, hold on. Yeah. So 650 is cost till date, right? And further estimated cost, we will keep same at 300 only. So total cost will be 950. Right? Total cost will be how much? 950. Now, percentage of completion. Total cost 650 divided by 950 into 100. Can anybody tell me the percentage of completion over here? 68.42%. Okay. So revenue will be how much? 850 multiplied by 68.42%. Answer for this? 850 multiplied by 68.42%. 581.58 minus 294.72 already recorded. Am I correct? So what is the final answer? 286.85. Right? So when I record the in my P&L, by contract revenue 286.85, to contract cost 300. Right? Now the difference between the two will be adjusted in the provision. How much is difference between the two? 13.15. So here I will write by provision for loss 13.15. Now people will be wondering, sir, my revenue increased by 50 rupees. My revenue increased by 50 rupees. So my overall loss will also come down by 50, right? So the overall loss has to come down by 50. That will come down, but the adjustment will be done in the third year. Because you cannot record the profit in the second year. Because you are in an overall loss. So when you are in an overall loss, in the second year, profits will not be recognized. That is why I've just adjusted 13.15 in the provision. So now if you see the provision account, 94.72 was the provision you had created. And now you are reversing 13.15. So what is the balance left in the provision now? 81.57. Now let us see in the last year, does this 81.57 get reversed or not? It will not get reversed. Only 31.57 will be getting reversed. Because 50 rupees loss has come down, so that loss will be adjusted in the third year. Now quickly come to third year. How much revenue? Sir, full 100% work will be completed. So 850 minus 294.72 minus 286.85. What is the answer for revenue? What is the answer for revenue? 268.43. And cost will be 300 only. Right? Cost will be 300 only. So if I am making the PL account over here, I will say by contract revenue 268.43 to contract cost 300, right? By provision for loss. Sir, how much is getting adjusted? Only 31.57. Right? But can I say you still have 50 rupees balance in the provision account? Because here we had calculated 81.57 minus 31.57. 50 rupees left over is your excess provision. And this excess provision will be written back, reversed. So when you reverse this, in the first year you recorded 150 as loss, and now 50 rupees will be reversed. So technically only 100 rupees loss on contract. So in the third year, I will reverse this, plus I will reverse the 50 rupees also. So total reversal will be 81.57. Right? Or you can also show it finally over here to net profit 50. right? So 81.57 provision gets reversed because 31.57 is because the actual loss of third year. The actual loss of third year is 31.57. So that is adjusted against the provision. But after adjusting also, you still have 50 rupees left in the provision. And why this 50 rupees is left? Because your loss is reduced by 50 rupees. And this 50 gets reversed in the final year. So you land up getting a profit of 50 rupees. I hope you're understanding this point. So technically, one point that you need to remember, if there is an overall loss on contract, profits cannot arise in the second year or third year. So that is why I have not recorded the reversal over here in the second year. I have not shown here to net profit 50. See, that is not allowed. Whatever has to be done will be done in the last year itself. Right? But in the second year, if the losses would have further increased by 20, then I would have created a further provision by 20 rupees. I would have increased my provision by 20 rupees. But profits cannot be recorded in the second or third year. It will be recorded in the final year itself.
So first we had the overall loss of 150 rupees, no sir?
Yes, but now we have an overall loss only of 100.
Yeah, sir. The overall loss, then the cost price, the contract price increases by 50 rupees. So the net loss will be 100 rupees, sir.
Correct.
So then why we record 2 net profit? How we get the profit, sir?
Sir, just check now. In the first year, you have recorded a net loss of 150.
Okay. Yes.
You have an overall loss of only 100. So can I say technically 50 rupees of loss should be reversed?
Yes, sir.
That is why you're getting a 50 rupees of net profit in the last year because of the reversal of excess provision.
Yes, sir. So if this provision becomes zero, then there is no, if it is becomes zero, then there is no changes in the provision, no, sir?
Sir, if everything is remaining constant in the question, then in the last year, this balance 81.57 would have got reversed.
Okay.
If the net loss remains constant at 150 rupees only, then in the third year, 81.57 entire would have been reversed.
Okay.
And there would have been no further profit or loss. But here only 31.57 gets reversed.
Okay, sir.
And this 50 rupees is nothing but excess provision for loss written back.
Excess provision for loss. Yes, sir.
Good evening, sir.
Yes.
So no doubt
Good
as
evening,
such. I just wanted to see the initial part of the second example. So if you don't mind, can you scroll a little up?
Yeah.
Thank you, sir. Got it.
Yes.
Sir, one small clarification, sir. Sir, could
Yes.
not be the loss covered by escalation clause?
It depends.
Oh,
If there is an escalation clause, then it will be covered. But in my example, I have not taken. And see, all your losses cannot be covered by escalations. Certain part of your loss can be covered by escalation, not all the losses.
oh, okay, sir. Thank you, sir.
So that totally depends upon what is your agreement with the contractee.
Okay, sir. Fine.
Yeah. Who is this? Can you please repeat why revenue increases by 13.5? Where the revenue is increasing by 13.5 in the second year? What you people see? 13.15 is the provision for loss that is reversed. In the second year, the actual loss is coming as 13.15, but you cannot record again net loss as 13.15 because you have already recorded the loss in the first year itself. So in the second year and third year, what you will do is you will not again record net loss. You will rather adjust the loss against the provision that you have created in the first year. See, in the second year, again, I cannot write by net loss 13.15 because if I write by net loss 13.15, what will happen? Sir, first year 150 recorded. Now second year again showing 13.15 means you are showing a loss of 163.15. How is that possible? Can I see this 13.15 is a part of this 150 net loss recorded in the first year itself? So again, in the second year, it will not come. It will be rather adjusted against the provisions only. Because first year, you provide for the entire loss. And from the second, third, fourth, till the end of contract, all your losses that come every year will be adjusted against the provisions only. And if any excess provision is left behind, that will be reversed in the last year, as I showed in this question. That 50 rupees of provision is still left. Why? Because the loss came down by 50 rupees. So in the last year, I reversed that 50 rupees and recorded a profit of 50. I'll just show up this example. You can just take a screenshot for the same. Second example. Take a screenshot till 286. I'll scroll further. Take the full and final.
Sir, one small doubt, sir.
Yeah, please, madam.
In the above topic, why are we adding variation to the contract price, sir?
Because, madam, variations is your revenue. Na? We have already done what is meant by contract revenue. So when the contract is doing some change in the scope of work, you will definitely charge to him, na? Because you are going to change the specification, means your cost is going to increase. So if your cost is increased, you are going to charge for it. That will become your revenue.
Okay, if the cost increases, will we subtract the variation, sir, in the second year?
Why? Variation is your revenue. Why will you subtract?
First
It
year
is
it is
your revenue.
100, next year it will become 150. So we can reduce the variation as 50 rupees, sir.
Madam, what you're speaking, I'm not able to understand. You're going off the track. Please repeat what you're saying.
No, sir, will it come as loss? I asked.
How come loss will arise?
The first year it is 300. The next second year cost is 350. Like
Yes.
that.
So total cost is 650 rupees.
Okay, sir. So
So what is the problem? I'm not able to get you.
It is reverse, sir. I told that cost in first year is 300 and cost in second year is 350. It is just an assumption, sir.
No problem. Your percentage of completion will still be the same.
Okay, sir.
What difference will it make? Only the difference is what the provision that is going to get reversed in the second year will be lesser amount, or will be a higher amount, because your cost in the second year will be 350 as you are saying, but it is not going to change my overall solution.
Okay. I just want to clarify that.
It is not going to affect at all.
Okay.
Even if the cost of the second year is 300 or the first year is 350, it is not going to change any point.
Okay, sir. Thank you, sir.
Yeah, welcome, ma'am. What I'll do is I'll take you to one question. We'll solve one question based on this concept. Now we have 3 questions based on this concept. Out of the 4, 3 are based on this concept. So today we'll solve question number 1 and we'll also solve question number 5. 2 questions we have to do back to back. Disclosure part, question number 2, 3 and 4 we'll be doing in the next session. Now we'll do one thing. We'll start with question number 1. I want everybody to please come to the question bank, classwork questions. Please come to classwork questions. We'll solve question number 1. Then followed by we'll go for question number 5. Right? And in the next session, we will be doing the disclosure requirements plus question 2, 3, and 4. This will be the next agenda, next lecture. Question number 1. On 1st December 2016, Vishwakarma Construction Company Limited undertook a contract to construct a building for 85 lakh rupees. On 31st March 2017, the company found that it had already spent 64,99,000 on the construction. That is by the end of first year, because you started in December 16, 31st March 2017 is the end of first year. So till the end, you already discovered that 64,99,000 is the cost incurred. And prudent estimate of additional cost of completion was 32,01,000. This is your further estimated cost. So your total cost is coming to 97 lakh rupees. And the revenue that you're going to earn is only 85 lakh rupees. So can I say there is an overall loss of 12 lakhs? So technically, as per AS7, overall loss of 12 lakhs has to be recorded in the first year itself. But how it will be recorded? Sir, some part of the loss will arise automatically. That is when you record the revenue and cost, the difference between the two will be the proportionate loss that will come. The difference between total loss and proportionate loss will be the provision that you are going to create. Means, say for example, if the proportionate loss comes to 7 lakh rupees, which automatically comes in P&L because of revenue minus cost, 7 lakh loss arises. But your total loss is 12 lakh rupees. So you will create a provision for 5 lakh rupees. Further, what amount should be charged to revenue for the final accounts for the year ended 31st March as per the provisions of AS7? Now, what amount should be charged? Charged means debited to P&L. Sir, can I say entire 12 lakhs will be debited to P&L? Right? So we have to show each and everything. How much revenue we will record, how much cost we will record, what provision will be recorded, and what is the total loss to be recognized. Everything step by step we will show and calculate. Right? So let us start with the solution. So I'll solve it again. I already solved in the morning batch. I'll solve it again, no problem. Question number 1. Right? First, contract price. $85 lakhs. Correct? Cost incurred till 31st March 2017, 64,99,000 plus further estimated cost 32,01,000. So 97 lakh is the total estimated cost. Correct? So therefore, overall loss on contract will be 97 lakhs minus 85 lakhs, that is 12 lakh rupees. Correct? Next line, percentage of completion. I'd say 64,99,000 divided by 97 lakh total cost into 100. Can anybody please calculate this for me? %67. So next line, therefore, revenue to be recognized will be 85 lakhs multiplied by 67%. 56,95,000. So therefore, actual loss to be rather I would say loss arising will be, sir, I will be recording 64,99,000 as cost minus 56,95,000 as the revenue. So what is the loss arising? Can anybody please calculate this for me? Sir, it is 8,04,000. The actual loss that will arise, right? So therefore, provision for loss to be recognized will be what? Sir, total loss is 12 lakh, but out of that only 8,04,000 will be recognized. So technically 3,96,000 is the provision for loss to be recognized. So therefore, the total loss of rupees 12 lakh will be charged to PL account for the year ended 31st March 2017. So this will be your complete solution for question number 1. I hope you have copied question number 1. Now let us go ahead. Good that you didn't purchase bitcoins that day so that you can take lectures for us. Madam, it's all about destiny. It's all about destiny. I believe in destiny a lot. I believe in destiny and I believe in karma. So always keep your karma very well, because karma will hit you. Karma is a bitch, it fights back. So always keep your karma very well. Don't do any wrong doings. Question number 5. Question number 5. Mr. Sham, a construction contractor undertakes the construction of an industrial complex. He has separate proposals raised for each unit to be constructed in the industrial complex. Please understand, he has to construct different units in that complex. Means different wings, A wing, B wing, C wing, it might be like that. So different units are to be constructed. And he has raised separate proposals for each and every unit. And since each unit is subject to separate negotiations, he is able to identify the cost and revenues attributable to each unit. Should Mr. Sham treat construction of each unit as a separate construction contract according to AS7? Can he do segmenting over here? The answer is yes. Segmentation is possible. Why? Because all the 3 conditions are getting satisfied. The first condition, separate proposals have been given. Second condition, the separate negotiations can be done for each unit. And third condition, the cost and revenues can be separately identified for each unit. So technically, all the 3 conditions are getting satisfied for segmenting that contract. So technically, yes, Mr. Sham can do it. Now, this is a printed solution. Just have a look at the solution now. It's printed in your book, but there is a typing error. It is not question number 2, it is question number 5. So let's see what is the solution given over here. Just a minute, I'll just get this pencil connected. Just wait for a second. Yeah, sorry for the interruption. Yeah, what it says, as per AS7, construction contracts, when a contract covers a number of assets, the construction of each asset should be treated as a separate construction contract when same 3 conditions. Separate proposals have been submitted for each asset. Each asset has been subject to separate negotiation, and the contractor and the customer have been able to accept or reject that part of the contract relating to each asset. And the cost and revenues of each asset can be identified. So therefore, Mr. Sham is required to treat construction of each unit as a separate construction contract as he fulfills all the above conditions. So since all the conditions are satisfied, definitely you can segment the contracts. Segmentation can be done. Right? So we are actually running before time. So we can cover up the disclosures part also. We can just complete the disclosures part. We still have 15 minutes left. We can complete the disclosures part. But sir, be very careful. Only 2 parts of disclosures we have to complete. Just a minute. Okay, fine. Chalo, no issues. Not willing to learn the disclosures now? Or willing to learn?
Thank you,
Right?
sir.
Can you please disclosures now? It's because I will show you. No, in morning batch, disclosure is not done. So I think I'll keep the batches at par, because then it will again create a problem for some people. Then it will be like there in the like I have not completed disclosures in the morning batch. So we'll keep the batches at par. So we'll end up the session now. We'll end up the session. If anybody wants to raise a doubt or query, you still have 5-7 minutes. You can please ask.
Sir, good evening, sir.
Yes. Good evening. Good evening, madam.
Sir, can you show the paragraph about disclosure? I'll take a screenshot.
This one?
Yes, sir. Thank you, sir. Done, sir.
Yeah. Am I audible now? See, technically, now one student is asking me, sir, whether these accounting standards are actually enforceable legally or not. Technically, they are enforceable legally, but we don't follow. That is a different point. So see, all the large enterprises, they will definitely follow because audits and all are done. But the smaller enterprises, they generally don't follow all the standards properly. And there is no machinery with the government. Am I audible? Am I audible? Yeah, and there is no machinery with the government to check whether we are actually following the standards or not. Because ICAI or government, central government doesn't have any machinery to check each and every person's financial statement, whether the standards have been technically followed or not. So some small enterprises, they don't follow. And even the auditors or the chartered accountants, those who are managing their books of accounts, even they don't care. So there are so many practicing chartered accountants, friends of mine, who call and ask, because I basically do consultancy for all these accounting things also. Accounting standards and Ind AS, I do the consultancy services also. So they call and ask, sir, what should be done for this? Now this person has not followed this, how to show this. So even the practicing chartered accountants are not very much having the proper knowledge of these standards and Ind AS also. Because in day-to-day practice, these things don't come. Yes, Nikita.
Sir, can you explain escalation clause? I was late for the class.
See, escalation clause is nothing but when there is a rise in price of any of the factor of production, that is material rise, labor rise. So whatever is the rise in price, you can demand it from the contractee if it is written. If it is written, then you can demand. Escalation clauses have to be properly written in the contract. If it is written, then only you can charge. Means if the material price was 100 and now it is 120 rupees, so 20 rupees per unit prices have risen.
Yes.
So technically you can claim for that 20 rupees rise. Now sometimes entire 20 rupees will be paid to you because it will be written in agreement that whatever is the price rise, full amount will be paid. Or sometimes they will write only 50% of the price rise will be paid. So if 20 rupees is the price rise, 50% of that, only 10 rupees they will pay you. Or there might be some other way of treating the escalations. So that depends upon the terms that you have agreed with the contract.
Thank you, sir.
Right? Is anybody else with any further doubt or query? So please let us know that in next session, which chapters you are going to start so that we can keep our notes updated. We'll be starting with AS5. In the next session, we'll be completing this AS7 and we'll be starting with AS5. I don't know whether tomorrow we are having a session or not. Mostly we might have a session tomorrow also. So if we are having it, we will be starting with AS5. Because I think from 18th February, the regular students will also be joining us. So I think before that, we will be completing our AS5 also. So that is mostly tomorrow. if the lecture is placed, or whenever the lecture is placed, I'll be doing with AS5. So we'll complete 7 and then we'll go for 5. Right? So we'll take a leave now. We'll sign off today's session.